Welcome to the Tons of Industry Show. I have a great show because we're also going to screen share and going to see some live action or chart patterns with Chris Vermeulen. If you don't know Chris, the technicaltraders.com, it's a great website and a newsletter and service for technical analysis. He's very well respected in the community, and you can check him out on innumerable other avenues, including he just did one with kitco.com, which I listened to and I loved. And I'm very excited to have him back. Chris, thank you for being here.
Hey, thanks for having me, Lior.
Yeah. Look, let's start with a little bit of macro. Just because we're 2 weeks away from elections, it seems from what I'm reading that the sentiment is that the polls are not wrong this time, or that there's less chance that they're wrong and there are less swing voters and whatnot. And so it seems like Wall Street is betting on a Biden victory. They're already investing in green energy and whatnot, which also shows you where their head's at. I wonder, first of all, if you agree, if you think that there's a chance that Biden wins this, and if there is, what do you think of some things that have happened with brokerage firms, Chris, where they've asked traders to tighten their their margin requirements and whatnot, the CME, they've loosened their circuit breakers. What's going on here? That's basically the question.
There's a lot of questions in there.
Yeah.
So it's definitely a pretty wild time. And if, Biden gets in, obviously, there's definitely been a big move to the clean energy, solar stocks, clean energy companies in general. And really, they've been the leader since the March lows. If you look at a TAN ETF, actually, let me just flip to a chart real quick so you can just get an idea here. If you take a look at this, if we look at one of the leading sectors for the year, we've got this TAN ETF, which more or less from the lows. This is on the solar stocks. I mean, it's up 130% or 230%. It was up almost 270% from the March lows. So people are definitely betting on clean energy, that kind of rebuild. And there's a clean energy ETF that just holds a basket of these plays, which is very similar in terms of price action, underperforming a little bit compared to TAN, but obviously it seems like money's piling in, thinking maybe Biden's getting in. And these have been on a tear really since March. So, I mean, I don't know if it has to do with Biden or not, because this was really put in there a long time ago, but this rally, but pretty interesting chart pattern there on the chart going forward.
Definitely. And you know what? My wife's brother works for SolarEdge, which I think is up like 300%. It's a solar energy company, and my best friend here is a fund manager, and he's for years have already told me about Enphase. It's another company that is in this sector, and I think it's up even a hundredfold at this point. So I definitely get that. I want to ask you about trading. Can you show us very high conviction trades that you're looking at right now?
Some high conviction trades. So I've got this the scan down the side. This is kind of my band strategy, which stands for best asset now, and it ranks from the top performing all the way down to the worst performing. And what is really actually interesting is the top two performing are TAN and this clean energy ETF, both up obviously 200%. I just showed you. It's interesting that the opposite end of the spectrum, oil explorers and gas explorers, energy sector, they're the worst performing. So it's really interesting that this year we've got clean energy being the true leader, dirty energy, including uranium, uranium stocks down as well, underperforming. Just a really interesting kind of aspect on the market. But I think when you look at all the chart patterns, there's only one that actually has a really good setup that is on the verge of breaking out. I mean, we've seen a nice run in solar, but it's actually starting to get a little frothy. And the fact that we're getting close to the election, maybe that's going to play a role in that. If Biden gets in, then we're going to see the solar sell off, because it's usually buy the rumor, sell the news. So everyone's been buying in thinking maybe he's getting in. And so that plays pretty much over. And when you look at Robinhood brokerage, this big wave right here is when we actually saw a big wave of Robinhood traders, which are retail traders, piling into this sector. And I actually posted an article on it right back here on this green bar saying, hey, everyone's piling in. It's now becoming kind of public known sector, and the general traders are piling in. We're probably going to see some type of topping phase, or at least some type of pause. And we've been trading sideways and lower since then. And in that article, I pointed out that it was the exact same type of scenario back here in February where the Robinhood traders had piled in and chased prices up, and then it put in a very significant top. So I think this sector is gone. To answer your question, I think the freshest sector is going to be like the gold miners, the GDX, GDXJ, including gold and silver. The entire precious metals kind of complex has got a very similar pattern. But if we look at this is the daily chart going back to the March lows of the gold miner junior stocks. And what it's formed here is a series of bull flags. It had a bull flag flagged out here, formed another bull flag flagging out here. Now this flag here, now bull flag is a bullish pattern. It means price should continue, should resolve to the upside. So when it's done consolidating, it should go back higher. And the size of this flag is so big that it allows us to draw this previous rally from over here. And if you were to take a measured move using Fibonacci extensions from this recent low where it started to rally post COVID all the way up, we're looking around a $90 share in the GDXJ, which is pretty significant from where we are at $56 a share right now. So there's a lot of upside, but keep in mind, there's also some downside risk right now. Until it breaks out of this channel, closes above this blue line, which is the 50-day moving average, which is kind of known as a bit of an institutional line. It's kind of a layer where big money kind of steps back in for larger trends. We need to close above that. We need to close above this trend line in order for this new bull market rally to take place.
Okay.
And if we zoom out on the gold miners real quick, this is where gold miners more or less started to break out. It was right across this high here, through this high over here. And so this is the first pause and pullback within a bull market. And the first pause and pullback can be bought. And we can actually see that really good. I'll share real quick on the gold chart here. Gold put in a top in 2011, sold off, and then finally created this launch, this basing formation and this line in the sand that created a launch pad that once it broke out and had its first leg up, the first significant pullback is going to be a killer buying opportunity. And you can see what gold has done ever since. It's been moving up in a series of these bull flags. And so gold miners, the hottest sector, or I think soon to be one of the hottest sector, is right here. Gold miners are in this channel. They just broke out into a bull market earlier this summer. And so this is the first pause and pullback. So I think we've got some nice upside movement potential in the GDX. So that's kind of the hot sector. But again, it has to break out before you get into this, because I think we could see the precious metals market and all the markets really in general potentially pull back quite a bit. I think we could come down to the 50, potentially even $47 area in GDX. And that would still actually be very bullish if it gets down into this area. So people will be scared. They'll be panicking out. That's what creates a bottom in the charts. When the majority of people have sold their positions that were going to sell, that's when that short-term bottom's put in, and we'll see prices go higher.
That's very interesting. And let me give you the case against gold and for gold right now that I've been seeing, and you tell me what you think. Mm-hmm. For gold, there has been a lot of legitimacy from governments worldwide for more stimulus packages. So it looks like this isn't over. The vaccine has been pushed back. It looks like it's going to be just second half of 2021. So there's going to be a lot of pressure on prime ministers and presidents to get employment back on. So that's the case for. The case against is, hey, we're out of the recession. We're out of the big problem, and we're probably not going to need a lot of stimulus going forward. That's the case against it. And then obviously you have this election where nothing happens right now. So what do you think about this?
Yeah, I mean, there's a lot up in the air, really. There's a few balls kind of juggling up there, and we don't know what's going to land and hit the ground first. I think I mean, there's a lot going on for gold. I mean, we're in tough times. Lots of stimulus means, creating more currency, devaluation. So we're looking at inflation. I mean, all kinds of things coming together that really gold is going to probably shine and hold its value. Now, the flip side of that is if they come out with a big stimulus plan, people are also going to focus, I think, on getting back into stocks, and it could create another rally, major leg up in the stock market, which means
Okay.
if money piles in the stock market, it has to come out of somewhere. And that's where we could see potentially precious metals sector kind of come under pressure because people aren't going to be moving into that kind of defensive area. They're going to say, no, put me back into tech, put me back into solar, put me into whatever is leading or just into the stock market index because the Fed's pushing money in. And every time they've done that since 2009, I mean, we've seen the market go up. So trillions more could mean that it's going to counter kind of gold and put it under some pressure. But again, it also means that there's devaluation long-term in the currency, and that's bullish. So we could actually see gold and the stock market go up together, a lot like what bonds did in January and February. Bonds rallied really strong along with the stock market. And we could see that again, except for this time, maybe it won't be bonds as much. Maybe this time it'll be more of the physical asset like gold, which to me is holding up in a much better pattern. It's got more credibility, I think, as an asset, especially with inflation coming. So I think there's more upside potential there. So we could see them both perform pretty well together.
There's also a case to be made for if stocks are higher, it's going to be very cheap to hedge with gold. So that's another reason why gold and stocks
Mm-hmm.
can move together. Obviously, if stimulus is the main um, reason. Is the GDX and GDXJ ever trading opposite of each other?
GDX and the GDXJ, I mean, they might diverge a little bit because one is a different batch of gold stocks. We do see large caps this year. Large caps broke into a bull market months before the juniors, the GDXJ. Now, keep in mind the GDXJ actually owns, because there's so much money that has been going into GDXJ that there aren't enough stocks for it to go in, and they've actually GDXJ owns a lot of GDX ETFs. So that's why they track very closely now. There's been so much money moving in that it's the one ETF owns the big brother of the large caps. So they definitely track a lot closer probably than they used to a few years ago. But we have seen the large caps lead the way because they're kind of seen as the blue chips of the gold miners, the strong companies. But really they tend to move together, give or take a percentage difference. They tend to rally the same days, sell off on the same days going forward.
Chris, what do you make of earnings seasons right now? We're seeing obviously the biggest companies in the world reporting earnings. What's important, not for this quarter, but what's important as a trend? What's really developing here in this post-COVID world?
Yeah, I mean, I don't follow earnings too much because I'm a pure kind of technical analyst. But I mean, there's also obviously some of the tech companies and social companies like Snapchat are just killing it. They're doing exceptionally well. I mean, this is the environment for that type of company. In terms of, I mean, the vibe is actually pretty positive. A lot of people are saying, earnings are being met, earning estimates, or they're beating estimates. But when you step back and look at it, I mean, everyone's lopped their estimates, 20 or 30% from what they really should have been if COVID wasn't here. So just because they're beating bad, really low estimates doesn't mean it's a good thing. I think a lot of people lowballed things to just almost kind of help support the market. So the news seems to always be good. So overall, I mean, the majority of companies are struggling. If you look at the major indexes like the New York Stock Exchange, the Dow, the Russell 2000, those are kind of the core of America. And those indexes are not making new highs for the year. And that's the majority of stocks. But as soon as you look at the NASDAQ or the SP 500, which are tech heavy and biotech, those are trading positive on the year, and they make everyone forget that the rest of the world, or the majority of the stocks, are not recovering very well. And the financials are struggling, really almost one of the worst. I mean, they are technically in a bear market, and it looks like a big bear market bounce. There's no legs behind this move in the financials. And obviously, if companies are going to go under, and especially if we have another wave of COVID where companies and lockdowns happen, the banks hold all their loans and mortgages. And so that's why I think the banks are really underperforming, is simply the big money knows, hey, if we've got more problems with COVID and businesses continue to go bankrupt, another wave of COVID is going to just spike the bankruptcy through the roof. I think a majority of companies are clinging on, spending all their free loans or interest-free loans that they were granted to hope to recover. But one more wave of COVID, the banks are going to just get absolutely annihilated with bad debt. They're going to have real estate and properties, I mean, galore. So things could get kind of ugly that way.
What have you learned from this 8-month period since COVID broke out and really shook the world as we know it? Because there's been so many lessons that you can learn from how markets behave compared to what you expect them to, from how people behave compared to what you expect them to how countries behave differently, states. I mean, people that are my friends and are driving between states, they're telling me it's like different worlds. You enter one state, people are not wearing masks in restaurants, and they're eating. Another state is like the end of the world. So what have you learned, and how does it apply to investing and perhaps even to technical analysis? I remember that I published Wealth Research Group published wealthresearchgroup.com/list in the middle of March, like a buy list. And it was like the darkest days. But if you followed and studied that watch list, my God. So uh, basically, my question is, what has surprised you? What have you learned and you're going to take forward?
Right. So, I mean, I think COVID was the surprise. I think, the panic selling in the stock market really just goes to show that when people don't know something about something, like there was the unknown when COVID hit, we really didn't know. I mean, if we're all going to die, I mean, it was pure panic, and the stock market just absolutely crashed. Nothing really survived the drop other than bonds in the US dollar. Overall, it just goes to show that you really need to have some type of proper protection in place. You have to have stops in place, preferably if you're not good at mental stops, meaning if price drops to a certain level, you'll look at the chart and you'll exit. If you're not good at following through with taking a loser, you definitely need to have hard stops in place with your positions, because in only like 2 or 3 weeks, you can wipe out 30% of your life savings or your trading account, because the market can drop that quick. I think that was the fastest bear market in history. And it just goes to show you've got to be ready to just move aside and have a game plan. So that, I think, was the biggest thing to really learn and take away, that you have to have position management and manage positions. What I find amazing is how resilient people are. I mean, when people get backed into a corner, it's amazing how people can come together and find ways to make things happen and help each other. And really, this market's completely bounced back, and everyone is trying to be as confident as they can, and they are being confident. I mean, people are investing, people are going out and doing things. Hopefully, we don't have another big flare up. Hopefully, it doesn't hit some tipping point. But again, if it does happen, it's not going to be the end of the world. It's people are going to come together in a bigger, better way. And I mean, this whole opportunity of COVID, I mean, while it's really bad for the majority of people, it's going to create all kinds of new products, new jobs, new sectors and industries. So it is a big opportunity, but it's definitely always tough to take change when you didn't ask for it. And it was that severe, which everyone's going through, because, everyone has now changed to working from home. Everyone works from home almost, it seems. And, going into an office or a skyscraper building seems just so almost barbaric. Who wants to get piled into an elevator with, a building that has 10, 20, 30,000 people in it that are using it? Times have changed in terms of that.
What can you tell us a little bit about your services and your website?
Yeah, so my trading service, I provide analysis, kind of like what I just showed you with the screen share a few minutes ago. I walk through all the charts. Sometimes I use intraday charts in the mornings. And so before the market opens, I run through, the stock market, the bonds. I go through the dollar, gold, silver, miners, oil, natural gas. I cover all the major assets. And we just analyze and see, okay, what did they do yesterday? What have they done in overnight trading? What are they looking at here in pre-market? And how are we expecting them to move today? Where are the targets? How is it going to affect our positions? Should we be involved or should we step aside in this market? So I kind of walk you through. So not only do you learn technical analysis, because I'm constantly explaining while I draw and give us targets, but we also issue trades on the ETFs, so you can simply follow along with any trades that the charts are pointing to.
Okay. And lastly, what is your bet for the elections? Just give us a bet. Don't go AWOL. Just give us a bet.
Oh, I don't know. I have a feeling Biden's going to win, but for some reason everybody I talk to says Trump's going to win. I don't get it. I mean, it's just a shot in the dark. Who knows? But the elections, their debate, I mean, it's so depressing to watch that, it dropped down to these levels where they're fighting like schoolboys. It's just, yeah. I don't know.
Okay.
Well,
Title of this
Biden
interview will
probably.
be Vermeulen says Biden, but friends say Trump. So, but Chris, I really appreciated the technicaltraders.com. You've showed us nice charts. Hopefully, people have taken advantage of what's going on here. And we'll definitely touch base with you as soon as possible.
Sounds great. Thanks for having me on the show.